Boom, welcome back. This is Stock Broc. It is August 20th today. The headlines are calling this market move a sell-off. But let's be real. This is just another dip in the market, but not a crash, not a panic, just yet. In days like these, you can actually spot the smart money at work. Let's break down what's really happening, the names taking a hit, and where dip buyers are stepping in. So context, this is not a crash, it's a dip. Over the past few days, the Nasdaq has dropped close to 2% and the S&P has slipped over 1%. A crash is over 10 to 15%. A dip or a pullback is about 10%. So anything 15% and over would be 10 to 15% is basically a dip, but getting closer to 15-20% is a crash. And the S&P just slipped over about 1%. Tech stocks especially have been under pressure, with notable names like Nvidia, Palantir, AMD, and the rest of the so-called Mag 7 taking a breather as well. But for long-term investors, moves like this are normal market moves. Market noise. Remember, a true sell-off, as mentioned, means a drop of 10% or more. But of course, shooting towards more 15 to 20%. But right now, we're nowhere near that. We just have a little volatility ahead and a little uncertainty, and this is what causes these type of moves. Let's call it the big names, and some people are taking profits. August is usually a month where a lot of investors do take vacations and kind of go away for a little bit and take some profits. And if you look at a lot of the big companies, the average volume is basically the average amount of shares that are being traded in a day, and you can see the daily volume. So if you see that below, that means it's a light day. So you can always gauge where people are at, trading the stock and looking at the volume. So some of the big names like Nvidia is down 3.5% in a single session, its biggest drop in months. Palantir tumbled over 9% at one point, leading the S&P 500 for losers. Apple, Amazon, Tesla, Microsoft, Google, Meta, all down 1 to 2%, so not a biggie. There's also the chip makers, AMD, Broadcom, Micron, ARM, Marvel, each fell 3 to 5% recently as well. And where's the dip buying actually happening? Here's the interesting part. When you look at the volume today, you'll see a lot of people stepping in to buy these names on weakness. One of the notable names is Nvidia. You can also look at the technicals and see what type of candle it is, especially if it's a doji. Basically, it looks like the letter T. So basically this bottom, they're buying up the stock, and it closes at basically where it opened for the day. So it sold off, and then it got bit back up. So I'll do a different video on the technicals and chart patterns and candles. But for now, let's take a look at where a lot of people are stepping in to buy those names on weakness. Value and momentum funds are scooping up big tech, seeing this as a discount, especially for names like Nvidia, Microsoft, and Meta, which have strong balance sheets and real earnings power. Intel actually rose nearly 7% thanks to renewed institutional interest after a big investment move by SoftBank. Proof that traders are rotating, not running for the exits. Outside of tech, there's money flowing into more defensive, dividend-paying sectors, into value names, but all eyes remain on quality tech, as short-term sentiment shifts haven't changed those companies' long-term growth stories. And as mentioned in a podcast earlier today, the small cap sector is basically at a standstill for the last 4 years, and that's quite a long time. What's causing this dip? So there's the worry factor that we have Federal Reserve keeping rates higher for longer. Everyone's watching this week's Jackson Hole Conference, which generally takes place at the end of August in Wyoming. So we have that on Friday. So that's going to be something that's done, I believe, in the morning on Friday. So, and that's a lot of the expirations that expire on Fridays. So it could be a very volatile day on Friday. There's fresh doubts about whether AI investments will actually deliver profits right away. A a lot of people coming out, like Sam Altman, saying this could be a bubble forming. Recent surveys say companies aren't seeing immediate returns, making traders question the AI trade euphoria coming out. A lot of people saying it's a bubble and comparing it to the technology run back in 2001. Some people are just taking profits after a massive run-up in big tech, natural rotation, not a panic. So overall, what's the bottom line? Big down days might look scary, but when you zoom out, this is almost textbook bull market behavior, a much needed breather after a long run-up. A lot of green days in a row, but we need to take those red days and be okay with it. For savvy investors, these dips are chances to add to high conviction names at better prices. What about you? What are you going to do? Are you buying, holding out for more red, or rotating into different sectors? Drop your moves in the comments below. Thanks for watching. Peace out.